At this exact second, Rezolve AI PLC, ticker symbol RZLV, is trading at 2.48 USD, having slid down by roughly 0.062 points or 2.42% on the intraday session. If you are watching this on your screen, perhaps scrolling through your Robinhood app or checking your positions on a Fidelity mobile app, this red number might look like a warning sign. It might look like just another microcap tech stock deflating after a hype cycle. That is the expectation. The market looks at a sub-$3 stock dropping 2% and assumes weakness, lack of interest, or a fundamental flaw in the business model. But the reality is that this specific price action, this compression right around the $2.50 level, is potentially the most deceptive signal on the entire NASDAQ today. While the broader market is distracted by the mega-cap movements of NVIDIA stock or the safety of Apple stock, Rezolve AI is currently digesting a massive strategic meal that the algorithm-driven trading bots have not fully priced in yet: the acquisition of Crownpeak. What you are seeing isn't a sell-off, it is a repricing of risk following a major expansion of their total addressable market. The expectation is that acquisitions are messy and expensive. The reality is that RZLV just bought a massive engine to distribute its Brain Suite to hundreds of enterprise customers overnight. When we analyze the intraday tape, the volume on this dip is telling a very specific story. It is not the panic selling of retail investors fleeing a sinking ship. It looks more like the calculated repositioning of institutional capital. If you look at the order flow, which you might not see on a basic online investing site, but can access through more advanced tools like the Interactive Brokers trading platform, you will see that the bid support at $2.45 USD is incredibly thick. This suggests that while the headline percentage is negative, the smart money is treating this zone as an accumulation block. They're using the uncertainty of the Crownpeak integration to scoop up shares before the revenue synergies start showing up in the quarterly reports. The disconnect here is between the short-term trader who sees a red arrow and sells, and the long-term allocator who understands that RZLV is no longer just a concept stock. It is now an infrastructure play with a clear path to $150 million in annual recurring revenue. The core of the bear case, or the skepticism surrounding Rezolve AI, often comes from a misunderstanding of what they actually do. If you ask the average person using SoFi Invest or browsing investing sites, they will likely tell you it is just another chatbot company. That is the expectation, that this is a wrapper around ChatGPT that will eventually be commoditized. The reality is that Rezolve AI is solving the single biggest problem in commercial artificial intelligence today: hallucination and friction. Generic large language models are terrible at commerce. They make things up, they cannot check real-time inventory, and they cannot process payments securely. Rezolve's proprietary Brain Suite, specifically the BrainPower LLM, is built solely for commerce. It doesn't write poetry, it sells products. It connects directly to a retailer's back-end to ensure that if the AI says a pair of shoes is in stock, it is actually in stock. This distinction is what separates RZLV from the hundreds of AI startups that will go to zero. They aren't trying to be everything to everyone. They're trying to be the transactional layer of the internet. Let's talk about the recent Crownpeak acquisition because it is the primary driver of the current volatility. On December 1st, just a couple of days ago, Rezolve announced this deal. The market's knee-jerk reaction, which we are still feeling in today's minus 2.42% move, is often acquisition indigestion. Investors worry about cash burn, integration headaches, and dilution. However, the strategic reality is that Crownpeak gives Rezolve an immediate, massive footprint. Crownpeak is a digital experience platform with a roster of blue-chip clients. By acquiring them, Rezolve doesn't have to spend 5 years building a sales team to knock on doors. They can simply plug their brain commerce engine into Crownpeak's existing customer websites. It's a classic land and expand strategy accelerated by M&A. If you are managing your own self-investing strategy or looking for investment help, you know that customer acquisition cost, or CAC, is the killer of SaaS businesses. Rezolve just bypassed years of CAC spend by buying the customer list directly. That is why the dip to $2.48 USD is so intriguing. It prices in the risk of the deal without pricing in the massive distribution advantage it confers. We must also discuss the partnerships with Microsoft and Google, as these are not just logo slaps on a website. These are deep co-sell relationships. When a company like Microsoft agrees to put your product in the Azure marketplace and incentivizes its own sales force to sell it and get paid for it, that is a game changer. It means that a Microsoft sales rep who is already in the C-suite of a Fortune 500 retailer selling cloud credits can now also sell Rezolve's Brain Suite and get paid for it. This leverage is invisible on the balance sheet right now, but will show up in the sales and marketing efficiency ratios in 2026. If you are analyzing this stock within a Fidelity brokerage account or comparing it to other high-growth tech names, you have to value this distribution channel. RZLV isn't fighting the big tech giants, it is riding on their shoulders. The expectation is that small AI companies will get crushed by big tech. The reality for RZLV is that big tech needs specialized, vertical-specific AI applications to make their cloud infrastructure valuable, and RZLV provides exactly that for the retail sector. Now, I want to take a moment to gauge your sentiment on this sector. Comment below with your thoughts. Do you think AI-driven commerce, where you talk to a bot to buy things, will replace traditional search and scroll shopping in the next 5 years? It's a polarizing topic, and your perspective helps frame how aggressive the adoption curve might be. Continuing with the analysis, we need to look at the Brain Checkout product specifically. This is arguably the most undervalued asset in their portfolio. Cart abandonment is the plague of e-commerce. You find a product, you add it to the cart, but then you have to fill out 15 fields of forms and you give up. Brain Checkout allows for a conversational checkout. You just tell the AI to buy it and it handles the rest, often in one click or one command. This reduction in friction translates directly to revenue for the merchant. If Rezolve can prove, and early data suggests they can, that their tool increases conversion rates by even 10 or 15%, they become indispensable. Retailers will not cut a tool that makes them money. In a recessionary environment or a slow economy, nice-to-have software gets cut, but ROI-positive software stays. This stickiness is what creates the recurring in annual recurring revenue. The financial guidance is another area where expectation battles reality. The company has put out bold targets, $150 million in ARR for 2025 and an eye-watering $500 million exit rate for 2026. Skeptics look at the current market cap and the stock price of $2.48 USD and say, no way, that's too fast. And to be fair, it is an incredibly aggressive target. But if you break down the math, combining the organic growth of the Brain Suite with the inorganic revenue from Crownpeak and the channel sales from Microsoft, it starts to look plausible. The market is currently pricing RZLV as if they will miss these targets by a mile. If they even come close, the re-rating of the stock would be violent. We are talking about multiple expansion. Right now, it trades like a speculative penny stock. If they hit $150 million in ARR, it trades like a mid-cap software compounder. The gap between those two valuations is the opportunity. Let's pivot to the technical structure of the stock. At $2.48, we are hovering just above the recent lows. If you look at the chart on your Interactive Brokers stock trading setup, or even a simple Robinhood fraction shares dashboard, you will see a double bottom formation potentially building. The stock hit a low, bounced, and is now retesting that zone. In technical analysis, the second test of a low is often where the conviction buyers step in. They wanted to see if the floor would hold. The volume drying up on the selling side suggests that the sellers are exhausted. Those who wanted out after the SPAC merger or the initial volatility are largely gone. What remains are the holders who believe in the 2026 vision. However, a break below $2.40 would be technically damaging and could trigger stop losses from those using automated Fidelity investments tools or trailing stops on SoFi active investing accounts. So, this $2.48 to $2.50 zone is critical. It is the line in the sand. There is also a geopolitical and macro angle here regarding